How should one invest in this kind of a market? Surely Indian markets have managed to climb the wall of worry, but will they continue to do that in the short term? Let's discuss all that and much more with Arindam Ghosh, Chief Executive Officer with BlackRidge Capital Advisors. Arindam, good morning. Thank you for joining us. Arindam, if I just map the market environment, China is in a mini mess. Emerging market currencies have their own issues. Growth is still anemic, yet Indian markets have moved from 5,900 to 6,500.
Nikunj, morning. Can you repeat the last part of your question, please?
Right. No, Arindam, my question is that at a time when we are staring at an uncertain world, China, emerging markets, emerging market currencies, but Indian markets, irrespective of global cues, have gone from 5,950 to 6,500. What explains this price action?
Well, Nikunj, the fact is that today we are clearly in an environment where the markets have actually been gyrating between risk on and risk off, with intermittent dull periods. So clearly, if you look at what's happening today globally, I think there is a risk off sentiment which is playing out. But if you look at India, FIIs have actually been rushing and putting money into the Indian markets. So there is some kind of course, a hope rally which is playing out. But it's kind of run probably ahead of its fundamentals. So I think whilst we have reasons to feel optimistic, but we shouldn't really get carried away.
Arindam, hi, morning. How big a concern could China turn out to be? Flashes of which we've already seen given the way our metals pack has been panning out.
If you look at the last 1 week and how actually the spate of news has actually played on sentiments, one can argue that India has been a beneficiary of of a disproportionate allocation to the Indian markets, largely on account of I think the series of bad news from China. But we must bear in mind that China is definitely the big elephant in the room. And therefore, how in what happens in China and how well they are able to maneuver and engineer, and this entire restructuring process that they are, how they are able to kind of deal with some of the bubbles which have actually got created and avert the possibility of a hard landing, is really going to influence sentiments globally. So that's, I think, is one huge, risk that, is staring up in our face. And we shouldn't really, therefore, get carried away by, the kind of FII allocation that actually we have been seeing in the Indian markets over the last 1 week. Because ultimately, markets all tend to, catch up. And we also must bear in mind that, the other big risk globally today is the US market and the strength of the recovery. And I think whilst the US markets are really trying to grapple and trying to build conviction around how much of the recovery is weather related, data is influenced by weather or not. And I think as in how there is clarity and the strength of the US recovery will actually determine how global markets and allocations are going to behave. So in an environment where the US recovery is indeed going to be very strong, that's going to be really bad news for emerging markets. And we actually may see reversal of flows happening, when interest rates start inching up. Though, despite, I think, the promise to keep interest rates, fairly low for a long period of time, treasuries may sell off and we may actually see, sharp reversals from emerging markets. So I think we need to be careful. I think typically from an India perspective, I think we have done a lot of good work in terms of improving our macroeconomic situation, whether it's the currency or the current account deficit. Indeed, they look a lot better relative to how some of the other emerging markets are actually looking. But we must bear in mind that India is dependent to a large extent on global fund flows. And global fund flows actually get triggered based on global news and data. And as and how we will keep having data coming in from China and from US, markets are going to kind of react, and therefore it's going to stay, it's going to swing between I think the range that Nikunj was mentioning, and we're going to keep markets extremely volatile and choppy.
Arindam, let's talk about the current leg of the market. What we are witnessing and what we are staring at is a very strong high beta rally. We've seen a couple of these high beta rallies in last 3 years. Unfortunately, all of them have ended very badly. Do you think this leg of the beta rally also will have a similar kind of a fate?
Well, I think, this high beta rally is based on, I think, one singular event, which is, the election and the hope around it. So therefore, it comes with it, fair share of risk. And I think that's basically what would differentiate this high beta rally, compared to some of the other high beta rallies, of the past. So I think, in the short term, whilst we feel that, this trend or optimism is probably going to continue in the run up to the elections, but markets most likely will take cues, once we have a new government and policies, how policies are actually shaped, once a new government is formed. So I think the short term trend definitely, despite I think the volatility would continue to be showing an uptrend, but the big up move or a possible down move can really happen based on the outcome of the election results, which is in any case it's always a difficult task to predict.
And Arindam, what's the sense that you're getting? Do you think this Maruti's Gujarat plant issue could escalate to larger levels than what we're currently seeing?
Well, I think there is always a serious whenever there are these kind of corporate governance issues, there's always a possibility of this kind of ballooning up and escalating to proportions where there is a fair amount of investor discomfort, which actually kicks in. There is already a lot of I think now voices which are now clearly protesting in protest and there is always a possibility that this may further intensify. Now, how much of this is really going to move, the management of the automaker is something that only time will tell. But clearly there are issues, and I think after a long time, we have seen institutional investors actually taking this up in the right earnest. And that's definitely, the way to kind of, deal with these kind of, corporate governance issues. So we'll have to wait and watch and see how it plays out. And it's really sad that, a stock like, Maruti obviously, will take a fair share of knock, given what's happening and probably what's going to happen over the, in the foreseeable future.
Arindam, I stumbled on an interesting trend in the morning, which is that the biggest gainer on the Nifty this year is actually an oil marketing stock, BPCL, up 20%. Do you think markets are finally revisiting oil marketing stocks because oil reforms now have kicked in on a monthly basis, diesel prices have gone up, crude prices are looking slightly toppy, and the fact that rupee has gone back below 61, that could be a big windfall advantage for OMCs?
Yeah, I think, that's definitely, you're absolutely right. I think that's going to be possibly, the trend that we are probably going to see, in the run up to the elections and beyond. I think a lot will also depend on how actually policies, get shaped once there is a new government. But there's no denying the fact that the diesel price hikes, will keep continuing. I think, the subsidy burden, is going to be ultimately, pared down. So I think all of these, would definitely augur well, for downstream, oil marketing companies. And therefore, it may well be, good to kind of, look at a couple of them, to have, in anyone's portfolio.
Own anything from the PSU oil space? If not, are you planning to buy anything?
Well, I think, there are a couple of things that, are of course, subject to what happens based on, policy level decisions, and whether it's around the gas price or these subsidies and all these are going to actually get addressed. I think once we have the election out of the way, a lot of these populist measures obviously cannot be pursued, and that's when the reality will actually sink in, and I think that will definitely augur well. So some of these PSU companies definitely from that perspective appear to be quite attractive bets actually.
Well, the jewelry companies definitely are going to be in focus today, considering there is a comment from the Trade Secretary saying that they are working towards easing gold import curbs. And Arindam, again, this has been in the talks for a while. We've seen a jump come in Titan and the likes as well. Do you think, A, that gold import curbs would be lifted, and how beneficiary would it turn out to be for names like a Titan, TBZ, PC Jewelers, etc.?
Well, I think, it's indeed heartening that, the current account deficit is now well under control. And I think, so there is always this possibility of, partial, lifting of these curves, or probably in a gradual manner, in a calibrated manner. I think that will also kind of, take care of some of these, illegal methods of, getting gold, into the country, which is kind of happening, or gained traction. So I think from that point of view, the possibility looks, definitely quite large. And therefore, again, I think clearly, some of the companies which actually, got seriously beaten down, fundamentally solid companies which got beaten down because of these curbs, actually, again, I think are good bets, and one should start building positions, around those companies. Because definitely, we would see, this getting, to a certain extent, reversed as we get into go beyond elections.
Arindam, final question. Give me a flavor of your current portfolio strategy. What is looking overpriced and what is still looking undervalued?
Well, I think from a portfolio construct point of view, one definitely needs to have, a fair share of high beta, high quality cyclicals, as well as, the export-oriented companies within the IT and the pharma space. We've always held the view that, banks ultimately, will always lead the recovery. So you need to have a fair, I think, mix across all these. Probably you can throw in a few of these, consumer discretionary names as well. Our sense is that, I think inflation probably, will continue to ease on the back of easing out of food price. And that would, give a little bit of elbow room to the central bank to kind of, focus a little more on growth without taking their eyes off inflation. So overall, I think, interest rate sensitives, quality cyclicals, and IT pharma, typically, the defensives, I think, and keep progressively rebalancing the portfolio in the run-up to the election and beyond. I think that's how to approach